officially entered the winter season in Canada. It snowed on Christmas Day, and this is a drone shot of my neighborhood. Welcome back, traders, to Oasis channel. My name is Ali Casey. I hope you're enjoying your time with your families and loved ones, and hopefully everybody is okay. In this video, I'll be exploring the portfolio that I'll be trading, hopefully 2021. This was in the back of my head since a couple of months ago, and I didn't have the time to do it. I wanted to trade seasonal portfolio and hopefully make it available for free, so any of you can trade some of it, all of it, or just watch it for fun and learning. So what I did, of course, I used the Seasonax tool, which everybody hopefully knows by now. It's a free tool that you can use to screen seasonality in stocks, commodities, indexes, currencies. And before we continue, I would like to answer some questions sent by viewers. If you want to subscribe to the full version of Seasonax, which is a paid version and has more features and more data, of course. If you use my code, I put it here, because some people were saying, when they click on subscribe, the price stays the same. And the discount only gets displayed on the subscription page. So if you click on the subscription page, and then click to subscribe, then the discount will be shown. And in any case, you can use this code manually, IHF4ORG. So even if you want to place manually, just when you're placing your order, just use this discount code and you should get 20% off. Okay, so now that's out of the way I'm constructing this portfolio is I'm going to separate stocks from currencies from futures, because I noticed some viewers of the channels are only into currencies, and some of them are into futures, and some of them are into stocks. So I'm gonna compile 3 portfolios separately, one for futures, one for stocks, and one for currencies. And of course you can combine them all, provided you have the account capital to do it, or you can trade any one of them. And the way, because Seasonax carries more than 27,000 instruments, even with stocks, it's very hard to pick which stocks. So what I did is I used a research tool. It's called StockRover. The link should be in the comments below. And here is my portfolio. So let me show you what I did. So I picked the stocks in the S&P 500. And this is not arbitrary. It's because later on I want to filter the trades based on the S&P market regime. If you remember, before I did a Seasonax seasonal portfolio, we just did some stop loss and that's it. Well, this time we want to trade it and we want to put more effort into it, so we get most of the odds with us. So in order to do that, since the stocks inside the S&P, most of the time will follow the S&P. So in this case, I used the S&P 500 universe, because all the stocks that I'm going to pick here, then later on I can filter if the S&P is in bull regime, is the trade better or worse, or it doesn't matter. And if it's a bear regime, it's better or worse, volatility and so forth. So that's my first reason to pick stocks in the S&P 500. Of course, if you live in a different part of the world, you can still trade this. But if you're into some other stock exchanges, like for example the DAX, or you live in another country, you can just pick stocks from your index, because Seasonax carries most of the indexes around the world. This is my first criteria. Then the second criteria is I put 120-day average price is above 10 and below 500. And this only took 20 stocks out. So it's not that big a deal. But if you have a big capital, then it's not a big deal. If you have small capital, then this will play a big role. So for example, if you have $2,000, obviously you cannot trade Amazon or even Apple for that matter, because that's too much. Yes, you're barely gonna buy one share or not. And you wanna be able to do position sizing, so then this is the filter. Then these filters, I think, are obligatory in my eyes. Big cap stocks, so 2.5 billion minimum, and average volume is average volume over the last 3 months is 2 million shares per day, and shares available, this is in millions, so 100 millions. Basically, what I'm looking at is liquidity. So I don't want any shares to fall into some short squeeze or some manipulation. These are mainly big cap stocks, highly liquid, with a lot of shares outstanding. Hopefully all what we find in seasonality will stay there. So once you do all this, then 247 stocks will pass these filters out of the 503 stocks in the S&P 500. So out of the 247, and here are the 247 stocks, then I picked each one, and for example, AIL, and then we go to Seasonax, and you enter instrument, and let's say, let's do Apple. You pick Apple. So once I am in Seasonax, then I picked other criteria to fit what we're looking for. So this is seasonality screening. And so we're doing only stocks for this portfolio. So we're not picking any shorts. And the reason for not picking any shorts, because shorts are a problem in, let's say, a crisis mode. So if the stock market, for whatever reason, we're in crisis, most government will, forbid shorts, or they will fight it to make it difficult. Also, stocks, when you short them, you need to borrow them. That's an extra fee. And then you need to ask your broker if it's available or not. So, and since anyway, the most stocks have a tendency, they have a long bias. So all in all, no shorts for this portfolio. So we will have shorts in currencies and in futures, but there's no shorts in this portfolio. And then the win percent has to be above 70. There will be no trades if the win percentage is less than 70. And then the median profit per trade should be higher than 2%. Obviously we want more, but this is the cutoff. And then the standard deviation, if it's less than, if it has negative years, it should be less than 6%. Basically, I don't want to be whipsawed, because remember, we're going to add later on stop loss. If the trade goes against you 6% and then make 10%, well, that's not good, because most likely we will be exited by then. We will not hold the trade for 6% loss. So we don't want high standard deviation in negative years. And then all trades should be less than 20 trading days. Of course, the lower this number, the better. But it's hard to get 2% with, let's say, 2 days. The more you're holding, the more profit you get. But the more you're holding, the higher the chance that you're going to be stopped out. So it's a trade-off, and I picked 20%, 20 days. It's somewhere in the middle. And then the time horizon for the data available should be greater than 7 years. And I'm going to pick maximum 15 years. Even some stocks have 30 years, 40 years available. I don't want to use all the data. I just want to use the last 15 years, because the last 15 years has a bull and bear market and has 2 crashes. And I want to be able to see all that data, and that should be enough for me. And on top of that, I should add it here, focus. So focus on last 5 years. Meaning what? Meaning even if the trade matches all these, but if the last 5 years are not making the 2%, then just drop this trade. It's not worth it, because that means the trend is down. So I don't want to pick that stock while the trend is down. I want to pick somebody that's already doing well in the trend in the last 5 years. And so once you come here, so you pick the 15-year stock and you do the detrending. Here, this scale, this is the percentage. So you can see now each square is 2%. And so I can pick, let's say, this one. And this is already looks good. It's more than 70%. The median profit is more than 2%. And my standard deviation is low. The trend last 5 years is good. 2%, 5%, 4%, 0.1, and 5%. The drawdown against me, the maximum drop, this is the maximum adverse excursion, MAE, and we will do a lot of analysis on this figure. So this is very important. And actually we should add it here. Less MAE. Meaning what? Meaning I don't want, if my percentage hovering around 2%, then I don't want all these pluses to have -3. Because most likely when I do my stop loss analysis, this will be a losing trade. So imagine if you have all of them above -3, that means all of them will turn out to be losers. And all these trades are going to be basically false. All these I took into consideration. And let's say most MAE is less than 3% to make it programmable. So focus on last 5 years, trend is up. So last 5 years, I don't want the trend to go down to 0 like this. I want it to go at least the same or going up. And most MAE, which is this one, maximum drop below 3%. Because most likely my stop loss will be between 1 and 3%. So the analysis will show us where to put it, but it doesn't matter what the analysis say. I'm not going to pick a trade where my stop loss is 5 or 6%. So once you do all that, and you go through all these stocks, in this case I have 247. So once you do that, and I spend a lot of hours on this, and I reach this number, 575 trades. So if you go to my portfolio, and let's reset. So 575 patterns. And when I did my research, so let me go back here. So when I did my research, I didn't pick, okay, let me pick in January now, and then let me pick something in February, let me pick something in March. No, I just picked the good trades. And the ones, because I have too many of them, I have 247, and I didn't check until now, just now. And you can see now I have, so let's test it. So let's pick, so this is the pattern start and end. So let's pick February. So in February, I have 76 patterns. And then if I pick April, or even let's start with March. Oops, let me reset. So March. So I have 50 patterns, and then reset, and let's pick, I don't know, June. Of course, I did all of them. I just want to show you that because I didn't focus on the month, but automatically, this is 62 pattern. So automatically I got more than 40 trades per month, regardless of, even though I was actually just looking at good trades. I wasn't shooting for the right date. And now that we have the 575 patterns, of course, a lot of them will be overlapping. So we cannot trade all of them. But the idea is I have a lot to choose from. All these are good. And then I'm going to pick even the best out of these. And I have many ways to do this. We can rank them before trading and so forth. But basically now we have a good collection that we're going to use to trade this portfolio. The idea is this portfolio will trade I don't know, 3 to 10 trades per month, depending on the capital and the overlapping. And we will see that in the later stage, but at least we can choose from many. And even if you have a small account, you can still trade 1 or 2 per month, because a lot of the trades are, you can see here the calendar days. A lot of them are less than, even though I put the limit at 20 days, but a lot of them are less than 20. So theoretically, you should be able to do at least two per month. Of course, the more you do, the better it is, not because of profits, it's because you're diversifying your trades. So if you have $2,000, it's better to do 4 trades at $500 than 1 at $2,000, because you don't know which one is going to work, which one is not. All of these have some percentages, winning percentages. Even this one is 100% winning percent. That doesn't mean it's going to be successful next time you do it. It just happened that the last 15 trades we did was profitable. So this is part 1 of this real tradable portfolio that I am building and taking you with me on this journey. In the next part, I'm going to download all these trades, and we will do the MAE exercise to find the optimal stop loss and probably optimal profit target also. And then from there, we will take it and see what the market regime effect on it from the S&P 500. And then we will pick the trades per month, which one we're going to do based on the performance of last month. And then we're going to trade. And it will be an excellent journey for you to learn many concepts that affects all kind of trading. We're going to do, the stop loss analysis. We're going to do position sizing. We're going to do ranking. We're going to do risk control. So all that plays in every type of trading you do. And I think this is really a good exercise and a practical exercise. And if you're going to trade with me, then hopefully you will make money also doing this exercise. So until the next part, stay safe, and I'll see you soon.